And this is Bloomberg Technology. Coming up throughout the next hour, we will do a deep dive into the $170 billion cryptocurrency market. Bitcoin once again hits a new high. What's driving this current crypto mania, and will it last? Plus, it's a date. Apple officially gives the time and place for the most significant product launch in years. We will discuss what Apple watchers are looking for, and the bar is high. And Expedia's CFO steps up to the plate after CEO Dara Khosrowshahi jumps ship to lead Uber. My conversation with Mark Okerstrom on his first order of business as the new chief of the travel company. But first, to our lead, it has been a banner year in the realm of cryptocurrencies. Bitcoin, Ethereum, Bitcoin Cash. Those are just some of the digital currencies that have been on a tear this year and seen their value skyrocket. The market for cryptocurrencies is now over $170 billion and rising. And with the ballooning value of this market, interest is at fever pitch. More bets are being placed on cryptocurrencies from high-profile investors like Mark Cuban to some of the biggest banks across the globe. We'll cover some of the biggest themes and issues around the digital currency market over the next hour. But it hasn't just been smooth sailing in the crypto world. Our very own Caroline Hyde took a look at what makes this market so volatile.
Cryptocurrencies are in the midst of a record-setting run. Names like Bitcoin and Ethereum have seen their values skyrocket this year. Bitcoin, which is as close to a household name as you can get in cryptocurrencies, has shot up over 350% so far this year. In fact, it jumped from just over $1,000 at the start of the year to over $4,500 recently. And Ethereum, the number 2 in the digital money market, well, it's on the move as well.
We see companies across all industries looking at how to use this technology.
But it's not been smooth sailing for the virtual currencies. Just look at a recent 30-day snapshot in Bitcoin's price and you can see a roller coaster ride. And back in August of last year, Bitcoin plummeted 13% after hackers stole $65 million. This year, Ethereum also fell upon tough times.
We have to remember that this technology is still pretty new, and that causes there to be glitches along the way.
But even with the volatility inherent in these new currencies, there are still plenty of promising opportunities. There is a growing mainstream acceptance of the asset class. Big investors like Mark Cuban are already throwing their weight behind new cryptocurrencies and the blockchain technology that underlies them. We're also starting to see more financial institutions such as Fidelity and even retail investors embrace virtual currencies. And if the SEC approves the first Bitcoin electronically traded fund, it will make it easier for the everyday investor to jump in. Perhaps tempting given Bitcoin has already soared past the price of gold for the first time this year. But given we're not yet 4 years removed from the infamous Bitcoin crash of 2013, there might be one sure bet you want to make when looking at the future of cryptocurrencies, and that's to buckle up.
And Caroline Hyde joins us now live from London, along with our guest host for the hour, Roger McNamee, co-founder of Elevation Partners, a private equity firm that invests in intellectual properties and media and entertainment companies. Roger, great to have you back here on the show.
Lovely to be back with you.
Highs, lows, Bitcoin, are we in a bubble?
I would think we probably are. I think it's really important to distinguish between cryptocurrencies and the blockchain technology that comes underneath them. To me, the thing about cryptocurrencies is that they really aren't currencies. They're really commodities like soybeans or pork bellies or whatever. They're things that people trade to create a return.
So what does that mean about the value?
Well, it means it's going to always be volatile. I think it's volatile by design. I think it was designed to be volatile. And currencies, by definition, need to have stability. And so if you look at this and you think about it, it's more like trading gold futures or more like trading oil futures. I think those are going to be inherently volatile. Yes, there's something very valuable underneath them, but you wouldn't use gold futures to pay your mortgage or to go pay your child's college tuition.
So do you think if you own Bitcoin now, does that have long-term value?
I think it's too early to know. I look at this and I go, structurally, these things don't look like they can make the transition to being real currencies, but I'm not sure that matters to the investors who are in them. I think they're just in it for the volatility and the return. And that may well work out, as it has recently for a lot of people. But I do think we're not done with the sharp drops, and I do think there are still enormous structural issues. I mean, there are thefts of the various cryptos here, there, and everywhere, and that I think is going to continue. And the whole concept of the role of miners, and the fact that these are things adopted primarily by black and gray markets, suggests, at least confirms my basic notion here, which is that I think these are far, far, far from mainstream currency options.
You mentioned people getting robbed. The number of complaints about Coinbase, the biggest cryptocurrency exchange, has gone from 6 last year to almost 300 this year. And yet, Caroline, we're seeing so much more mainstream acceptance. Give us some of the examples of how we're seeing mainstream investors embrace this.
I think that's what's so fascinating, and indeed it's the likes of Fidelity, one of the biggest money managers. They are mining Bitcoin themselves, and they themselves are also looking to be getting into this as an asset class. We're seeing banks, as Roger was there, clearly distinguishing between the actual cryptocurrency and the blockchain technology, the sort of shared record keeping that underlies it. Banks want to embrace blockchain, the actual technology. 6 banks today joining UBS's project, which is called the Utility Settlement Coin. They're building their own coin. It's going to be available by the end of next year. Why? To make financial transactions that much easier, clearing, settling. This is why they want to introduce this sort of technology, not perhaps as a store of value, as we're seeing Bitcoin suddenly become. I think that's what's so interesting, is why we saw the split in Bitcoin into Bitcoin and Bitcoin Cash. Is really at the heart of this is, what is Bitcoin? Does it remain a store of value? Does it become a so-called haven when you see a flight to value, when you see concerns about North Korea, for example, gold shoots up, as does Bitcoin? Or indeed, does it become more of a payment mechanism? Therefore, does the transaction capacity have to scale? And therefore, do we need to start to see improvements in the size of the transactions? This is how much Bitcoin is beating gold. I think what's interesting is, talking about the flood of investors into this market, you're for a roller coaster ride, whether you hold the actual cryptocurrency or indeed whether you gain exposure via a fund. Check out my Bloomberg at the moment. I'm going into #BTV if you type it into the Bloomberg, and indeed you can type in 3994. What do you get? A crypto roller coaster. What do you get, Emily? You see in the white line, Bitcoin Investment Trust. This is where money managers have been pouring their money, who don't want to buy Bitcoin outright. They want exposure. On the bottom half, there is where we see that the 90-day volatility of that investment trust is more than 3 times the volatility of Bitcoin. So whether you want to try and be overall, it seems as though you're in for a rough ride, whether you've got the cryptocurrency or indeed an investment trust.
Now, if you look at the run-up in Bitcoin, it is dwarfing the run-up that we saw before the tech bubble, before the housing bubble. Roger, is that a concern?
Well, only if you're long Bitcoin. If you've already taken your profits, you're sitting there going, not a problem at all. I look at this, and when you talked about $170 billion of interest in this category, that's why, that's why you see banks and others coming in. Clearly, people are going to, why are we having this segment right now? There's a lot of interest in it. The trick here is, at least for the viewers who are watching this, to separate the commodity of Bitcoins from the notion of a cryptocurrency. A currency needs to have stable value, and I just don't think you're going to get there from this. Then the third piece, and this is the one that I'm excited about, is the underlying blockchain technology. There are a lot of reasons why people would like to be able to do high volume financial and information transactions at a very low cost with privacy and security. Blockchain technology offers that promise, and I think everyone is excited by that. And what I would love to see is one of these banks or other financial institutions actually try to create a currency, try to create a stable store of value that would be, that would rival a national currency, because that is the promised land that I think so many people are hoping to go to.
Now, when it comes to the blockchain, there's all this talk that it could not just revolutionize financial services, but real estate, but giant technology companies that hold stores of data.
And sale of information, right?
So where do you think the blockchain could be the most revolutionary?
Well, I look at this.
Or is that an exaggeration?
Too early to tell.
Yeah.
To me, what's exciting about it is that it is like the internet before it. It's a distributed system where scalability is not a problem. And with the scale of markets you have today, if you can take that off the table as an issue, you can apply it to almost anything. Now, what remains to be seen is which markets will find this most appealing. And in its current state, the answer is only experiments, right? Consumers are not yet interacting with this regularly, but a lot of money's been raised. We're going to run that experiment. We're going to see. And I look at this and I go, to me, that part is really, really, really exciting. And it makes it worth going through what I think is going to be further issues around the so-called currency part of this discussion.
All right, well, we're going to continue this conversation throughout the show. Roger McNamee of Elevation Partners, you are with me for the hour. Bloomberg's Caroline Hyde in London. We'll see you in a bit as well. We'll have more on our special look at the world of cryptocurrencies throughout this show. Well, we officially have a date from Apple on its next product launch. Today, the company sent out an invitation that listed September 12th as the date of the event. It will be held at the new Apple Park campus in Cupertino, California, and take place in a theater named after co-founder Steve Jobs. As we've been reporting, Apple plans to introduce 3 new iPhones and new versions of both the Apple TV and the Apple Watch. Coming up, Lyft goes into overdrive to close the gap with Uber. We'll have the latest numbers from the ride-hailing company. This is Bloomberg. Lyft is expanding its services to 32 additional states, bringing that total to 40. The ride-hailing company is aggressively trying to take market share away from its rival Uber, which controls about 70% of the U.S. ride-hailing market. The latest data from Lyft means 94% of the U.S. population will have access to Lyft. And the Gap has the largest geographic footprint of any ride-sharing service in the United States. Staying with ride-hailing, Uber's newly minted CEO, Dara Khosrowshahi, has outlined some of his top priorities for the job, including a timeline for when the company should go public, he says, in 18 to 36 months. But when he walks in the Uber's headquarters on Tuesday, his first official day as CEO, what will be his top priority? Still with us, Roger McNamee, co-founder of Elevation Partners and my guest host. What do you think of this new guy and the problems that he has to solve? So, to me, anyone coming into this job has a series of problems that just require immediate attention. The first is that the company bleeds cash today, and they've probably got, on their current course of speed, 2.5 to 3.5 years worth of cash left. And that doesn't seem like the wisest course of action. That is assuming no negative settlement on the Waymo lawsuit litigation with Google. I think they're very vulnerable by that. I'm not a lawyer, but there have been emails put out that seem to suggest that Google's case is very strong. So you think that this Google suit is the biggest problem? I would say in terms of dollars, yes, that it's the biggest unknown for investors, because if Google, I mean, let's put it this way, if I'm the CEO, one of my first priorities is making that suit go away, right? And one of the best arguments for having a new CEO was that they can come in, do a mea culpa, and try to negotiate a way out of it. What's the worst case scenario for Uber in this situation? Well, I think that the worst case scenario is that they owe more money to Google than they can pay. And that would obviously be a very ugly scenario. And to me, hopefully there's some solution where Uber exits the self-driving car business, you know, that they stop trying to develop their own, they make a deal to use Waymo technology everywhere, and they pay some penalty, I don't know, something like that. Whatever it is, you're trying to settle for something less than the cash you have on the balance sheet. And then the CEO's got to go in and actually fix the operation. Because my understanding is that they are cash flow positive in some markets. And they are negotiating a new investment. We don't know if it's going to happen. Well, I don't know. I mean, the way I would look at this is that if I were the CEO, I would try to get to break even off the cash you have on the balance sheet now. I think it's far less important to be investing aggressively. They're at a scale today that if they can get to break even here, their cost of capital relative to Lyft and others in the space will be much, much lower, and their ability to then choke off competitors will be in place. They don't need to try to do it as a private company. What about the cultural issues and the personnel issues, especially the fact that the ousted CEO wants to have a seat at the table? Yeah, I mean, the good news here is that most of the management team has departed, so that the new CEO's got the opportunity to bring in his own team into the place. The challenge is that
Travis Kalanick's personality and Uber's culture were one and the same. And the strategy that I'm recommending, which is retrench, get the company to break even as quickly as you possibly can, is going to require a completely different personality from one Travis Kalanick had. And so I'm recommending that if I'm the new CEO, that we're trying not to have too much interference of the old into the new.
So when it comes to the business and working out through all these issues, do you see Uber delivering on a $70 billion valuation?
Not anytime soon. But,
or anywhere close?
Well, no, because I think, again, getting to break even is going to be a real challenge. And I look at this and say they've gotten where they are now because the consumer value proposition is fantastic. The problem is to get there, you've had to both abuse the communities you're in and the drivers of the cars, and you don't own an asset, which means it's relatively low barrier to entry in large markets for competitors to come in. So they have to solve all of those problems simultaneously. They've got to find a way to pay the drivers better, to make the deal fair for the drivers without making the offering unattractive to consumers. I believe that's doable. I believe consumers would pay more because, let's face it, ride sharing is an amazing thing to have available to you. But getting that right is not going, they're not going to get right on the first shot. And if the company needs to raise more capital before it can demonstrate profitability, I think the cost of that capital is going to be wildly higher than what they've paid before. And if they want to be worth $70 billion at any point in the future, I think getting to profitability soon would be an important step on the way.
All right, Roger McNamee.
Just a point of view, but that's mine.
And an important point of view. Roger McNamee, Elevation Partners, you are sticking with me for the hour. All right, coming up, my conversation with Expedia's new CEO, Mark Okerstrom. He details the departure of Dara Khosrowshahi, what it means for Uber and for Expedia's future. This is Bloomberg. Expedia stock soared Thursday, having its best day since November. This comes after the company named its CFO, Mark Okerstrom, as its new CEO. He replaces Dara Khosrowshahi, who left to take the helm at Uber. Earlier, I spoke with Okerstrom and asked him about his new role.
Well, you know, these things, you talk about them for years. It's almost like a sports analogy. You prepare the team for the big game, and you get a call on Sunday night, and suddenly the game isn't 2 weeks from now. It's, in fact, tomorrow. So it kind of unfolded a little bit like that. I think we were all ready for this eventuality when it did unfold. I don't think it unfolded exactly how everyone would planned, but I think we're all pretty excited around Expedia. We're very happy for Dara, and, you know, I'm really happy for the people at Uber. I think he's going to do a fantastic job there.
Now, when it comes to you and your job, Barry Diller said no one else was even considered. I know that you and Dara have been working together for many, many years, but, you know, what is your vision? What are some things that you might do differently?
Well, you know, as I've said, I've been very involved in the strategic direction of this company for a very long time, and Dara and I really have been lockstep in really all of the major strategic decisions, along with our chairman, Barry Diller. So I really don't have a long list of things that I'm dying to change. We've got a number of priorities across the company. Certainly becoming more international is one of our key priorities, so I'll be very focused on making sure we continue to expand globally. The big transition we're doing at HomeAway is a huge priority. So I think you're going to see a lot more of the same for us, and if I do my job well, maybe we can go even a little bit faster.
So let's talk about that. You now have some deep ties to Uber's new CEO. What are some new ways that you could work together, like perhaps free Uber rides for Expedia customers?
You know, we've talked a long time about possible ways that we could work with Uber, integrating their service into the Expedia app or the Hotels.com app or the HomeAway app. I'm hopeful that in the future, now that we've got a direct connection, those talks might be a little bit easier.
Dara's walking into an incredibly challenging situation, by all accounts. An ousted founder who still wants a role in the company, several lawsuits, very difficult board dynamics. I mean, we've heard a lot about how he can deal with big personalities. Tell us a little bit more about, you know, why you think he has what it takes to take on some of these personnel challenges.
Well, I think above all, Dara has one of the highest levels of emotional intelligence that I've ever seen. He knows people. He is humble. He listens. And I think above all, Dara makes the people around him better. People want to be around him. People want to think like he does. He's a great role model. He's a man of high integrity. He values diversity. He values gender balance. He really stands for a lot of the great things that, from what we read anyways, may be lacking at Uber. So I have 100% confidence that Uber is going to be a much better company under Dara's leadership.
Now, the information retracted a report that you were going with Dara to Uber. They were wrong. But there is a point there that Dara has a lot of executive positions to fill. Are you at all concerned that a number of executives from Expedia are going to follow him there?
Well, listen, I think we feel very good about our executive team. We've got, I think, one of the most talented executive teams out there. We've been together for a very long time, and they're really excited about the prospects around Expedia Inc. They're highly engaged. They're highly committed. We've been working together on a strategy that we're not yet done, so there's lots of work yet to do ahead of us, and I think we feel pretty good about our team.
My conversation earlier today with Expedia's new CEO, Mark Oakestrom. Coming up, we continue our focus on digital currencies, how one company is aiming to fill a security need by using Bitcoin blockchain. This is next.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's begin with a check of First Word News. Acting Homeland Security Secretary Elaine Duke says nearly 2 million Texans have been evacuated due to Hurricane Harvey. She says 32,000 are in shelters with the goal to move as many people out as quickly as possible. Duke added that rivers in flood-ravaged areas of Texas haven't crested yet and may peak by Saturday. A House Republican aide says lawmakers will most likely vote on the first phase of emergency relief money for Harvey in mid-September, approving an initial down payment that would replenish FEMA funds used in the immediate aftermath of the storm. Congress returns September 5th. The UN agency monitoring Iran's compliance on that deal with the U.S. and 5 other world powers says Tehran has not violated the agreement. The IAEA's report does not explicitly say Iran is honoring the deal, but mentions no deviations. The coordinator for the UN Human Rights Syria team says some 20,000 civilians are trapped in Raqqa as coalition forces fight Islamic State.
There needs to be a way of getting them out. Those who want to flee need to be able to do so in safety. Secondly, what we're saying is that everything then has to be done in accordance with international law to protect the civilians who remain. Even if fighting is going on, civilians have a protected status.
The UN High Commissioner for Refugees released a statement calling on coalition forces and others fighting Islamic State to do more to protect civilians. 4 companies have been awarded contracts to build prototypes of President Trump's proposed border wall. U.S. Customs and Border Protection says the designs will be constructed near San Diego. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 7:30 Friday morning in Sydney. I'm joined by my colleague Paul Allen with a look at the markets. Paul, good morning.
Good morning, Mark. Well, we should see some modest gains on the ASX futures, a little higher, just 5 points higher at the moment. But some action could come from the resources sector. BHP and Rio Tinto ADRs were higher in New York as resources prices increased, particularly aluminium and copper. Iron ore also up 3.7%. Nikkei futures also pointing higher out of Chicago as we wait on manufacturing PMI for August out of Japan and second quarter capital spending as well. And out of China, we're waiting on the Caixin PMI read following Thursday's encouraging official read. A lot of data out of South Korea today. Second quarter GDP that's expected to stay steady at 0.6%. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Back to our deep dive on the digital currency market. Thanks to a massive rush from investors this past year, the entire industry is now valued at $170 billion. Now I want to send it back to our Caroline Hyde in London, who is standing by with a leader in the cryptocurrency space. Caroline, take it away.
Emily, thanks so much. You're right, the leader is none other than Vinny Lingham. Now, Lingham has been in the digital currency game for some time now and is known for his continued success in calling the price of Bitcoin. Now, the serial entrepreneur now heads up Civic, a security identity platform that provides a decentralized method of confirming your identity using the blockchain. Joining us from Boston, it is Civic CEO Vinny Lingham. Vinny, great to have you joining Bloomberg Technology. And the Bitcoin Oracle is what you were dubbed, but then back earlier this year, you said you sold out most of your holdings in Bitcoin. Do you regret it, and why don't you buy this rally?
Well, look, I decided that at the start of the year there were a lot of risks on the horizon. I mean, obviously Bitcoin had a really good run. Last year Bitcoin was sitting at around 400 where I made the call to buy, and I said, look, this is something that's going to go up. And when we got to a point where there looks like there are a couple of hard forks this year which create sort of technical risk for Bitcoin, I decided that there was a risk-on scenario that I didn't like personally for my portfolio, and I decided to reduce my holdings in Bitcoin. But you know, I still hold Bitcoin, so I've been very happy with the run.
Of course, there's still ongoing concern about yet another opportunity for a hard fork to occur as soon as November. Do you expect that risk to become a reality?
I do. At this point in time, we have roughly 85% of the mining hash power, you know, standing behind SegWit 2x, which is a proposal to upgrade Bitcoin in a sense. And there's some debate over whether it's an upgrade or not, but it's really about the block size of going from 1 megabyte to 2 megabyte with SegWit, which is added to it.
So these are all very technical terms that we're now hearing, and this is about trying to expand the transaction size of Bitcoin and making it basically more of a means of transaction, a means of payment, rather than perhaps just a store of value. We've had Roger McNamee joining the show saying, look, he doesn't buy Bitcoin as a currency. He sees it much more as a commodity. Will Bitcoin and indeed other cryptocurrencies become a method of payment rather than a store of value?
Look, I think that the store of value analogy is very good. It just is, and something which I've been saying for a while. I think Bitcoin becomes a store of value if it becomes more of a payment method. I mean, you know, my view on Bitcoin was it started off with something which was a speculative, you know, commodity, the world's first digital commodity, and then it became a medium of exchange, which we started using for transactions. And then in the long term, as the price rises and it becomes more stable in price, it becomes a store of value. Stores of value are not typically super volatile, so you're looking for things which you know are going to consistently rise, you know, every single month and year, and you can actually store value in it. Bitcoin has been very volatile this year. I mean, you know, a month ago we're sitting at 1,700, or 6 weeks ago at 1,700. Now we're at 4,700. So that's pretty volatile, but it's been, you know, again, it's in a good run right now. It could continue to go up to, you know, sky's the limit. I wouldn't put a number on it, but my issue has been with the technical risks.
Many, though, are very excited, not just about the cryptocurrencies you could or could not buy, but the underlying technology, the blockchain. And this is where your Civic company comes in. This is about identity record keeping. I mean, this blockchain could disrupt the financial sector, law keeping, record keeping. Where do you see its greatest application?
Well, that's the exciting stuff for me. I care less about the price. I mean, in fact, I think too much focus is made on the price of Bitcoin versus the application of Bitcoin and blockchain technologies. We're using it in such a way that we're basically able to create digital IDs. And the problem that Bitcoin solved was that double spending with digital electronic money was something which hadn't been solved before. How do you prevent somebody from spending the same money or the same digital tokens twice? And Bitcoin solved that. And in the same way it solved that problem, it solved it for digital IDs. How do you prevent someone from making a fake copy of a digital ID by just copying the bits and bytes and moving it from one location to another? By leveraging the blockchain, we were able to create digital IDs that you could use as a way of going through airports, passports, logging into websites, accessing your motor vehicle, and at least when someone checks the ID, they know that it's you.
Vinny, what fascinates me is, of course, you yourself did an ICO, an initial coin offering. It was a pre-ICO even, but you've raised money by going to the crowd, by selling your own tokens. How much is the venture capital industry going to be disrupted by blockchain technology, by people being able to raise vast quantities of cash in very short time horizons? Because why didn't you go to a VC?
So we do have VC investors, and we had a few rounds of VC funding. This was different. We did a token sale, and the reason we did a token sale was we're trying to create an economy that uses smart contracts, which is something which sits in the blockchain and cryptocurrency world, to enable us to run these ID, sort of digital ID products. And these smart contracts enable a huge amount of privacy because you don't want people to know when you're using your ID and how, etc. So we did our token sale, and part of the token sale we reserved 33% of the tokens for partners. So now we're able to onboard very large partners. For example, WikiHow.com, they've got over 150 million monthly active uniques. We're live on their site. We're able to do that because we're able to offer them tokens to be part of the network, to enable a network effect to take off and allow digital IDs to grow.
The joy of marketing via an ICO. Civic CEO Vinny Lingham, great to have you joining us live from Boston. Emily.
All right, Caroline, thank you. Roger, I gotta let you respond because I could just see the skepticism in your eyes as you were listening there.
Yes and no. I hope he's right. And clearly to this point, he has been, and it's worked really, really well. I think for the average consumer who's looking into this space, you just need to remember we're in the early days, and we're at the portion that favors the people who have lots and lots of information. And for the typical consumer coming in here, you're at a huge disadvantage, and I do not think in either the short or long term that's going to work out well for you. You never want to be on Wall Street as the one with less information.
All right, Roger McNamee, Elevation Partners, you are sticking with me. Coming up, more on our deep dive into the world of cryptocurrencies. We will hear from Fred Ehrsam, Coinbase co-founder and one of the first people to put all of his professional efforts into this industry. His thoughts on the current price and how blockchain can disrupt more than just banking. Next, this is Bloomberg. As we've been discussing throughout the show, the rise in the value of the crypto market has been unprecedented. So, can the industry scale as more investors jump in? How is it gaining legitimacy among big investors and institutions? We asked those very questions to Fred Ehrsam, Coinbase co-founder, who remembers when Bitcoin was just in its early stages. Take a listen.
People who are working on Bitcoin early always thought it had the potential to be something huge. Otherwise, they wouldn't have been so excited about it, or they wouldn't have spent their time on it. But to have said it then would also have sounded crazy. So you always think it's possible, but you never assume.
You've said we've gone through several hype cycles. I mean, do you think we're in just another stage of a hype cycle here?
Yeah, one of the luxuries, I think, of having been in this industry for about 7 years now is you get to see this same kind of hype, boom and bust pattern repeat itself over and over and over. I remember when Bitcoin went from $2 to $32, back down to $2, then it went to 256, back down to 70, over 1,000, back down to 200, and now we're over 4,000, right? So I think the reality is that these sort of boom hype cycles draw more people in, more investors, more talent, more attention. And even if there is a bust, you arrive at a subsequently higher baseline than where you went in, and the cycle just kind of repeats itself into this sort of self-fulfilling prophecy.
So do you think the industry can scale as more investors jump in?
Yeah, so this, I think, is the main bottleneck for the industry. Right now, the blockchain is about 100x off of being able to handle an end-user application of about 5 million users, and about 20,000 off running Facebook as just one application on the blockchain. So we're quite a ways away. That being said, if you remember the beginning of the internet, people thought it was crazy that everyone would be able to interact on it, let alone play a simple video, right? And we do that every day today. The good news is there are a lot of different approaches for scaling. The bad news is not too many people are working on it yet. The other piece of good news is that, as we were saying before, with this hype cycle, there's way more talent entering the industry than I've ever seen before, probably by at least a factor of 5 or 10.
And where are they coming from?
Really all over. Some people are taking the jump from Wall Street. The thing that I think is really exciting now is you're seeing talent from the kind of the typical mega tech companies out here start to flow into the industry, really high quality engineers who know how to scale systems.
So how do you see cryptocurrencies gaining legitimacy among investors and institutions?
Yeah, so encouraging signs on that front. On our exchange, GDAX, we've seen some of the more typical hedge fund players, especially the market makers, start to sign up over the last couple of months, which is really great. And you see it talked about, more and more in sort of the typical Wall Street forums, banks starting to experiment with various aspects of the technology. So I think all that progress is great and it legitimizes it. At the same time, I also think it's less important than most people may think. The reason is, I think most interesting behaviors and technologies that come out of new paradigms are usually native to the new paradigm. In other words, if you look at the top 50 websites on the internet right now, the only one that was a company that existed before the internet was Microsoft. All the others are brand new. It's new kind of behaviors like eBay, Wikipedia, Google, Facebook, et cetera, right? So while institutional support is important and will help us get off the ground, I also don't think it's where the most interesting stuff will happen.
Where will the most interesting stuff happen?
Organic things from the community, things that were never possible before the blockchain existed, these sort of uniquely enabled behaviors.
So give me some examples.
Yeah, absolutely. So I think one of the really interesting things about where we are in technology today is technology companies are the most valuable companies in the world. If you look at the top 5 by market cap, Google, Apple, Facebook, Amazon, Microsoft, right? But if you look at just why these companies are so valuable, it's because they've effectively built really big databases around strong networks they have. For example, Facebook has a big social network, and you can't take that network effect and port it over here if you want. You could say the same about other big networks you might use every day, like LinkedIn or Uber or Twitter, whatever it may be. Blockchains, I think, represent a fundamental paradigm shift there, where now you don't need a middleman, much like you don't need a middleman to move your money. We might think about it disrupting banks. You don't need a middleman to own your data and potentially extract a rent from it.
So do you see Bitcoin then as a way to disrupt the big tech companies?
Exactly. I think the big tech companies will be disruptive as much, if not even more, than the big banks. And considering those are the most valuable companies in the world, maybe that's what's really worth paying attention to.
How so? What does that actually look like?
So it means breaking the data monopolies that they have, right? The reason, for example, Facebook is a really, really valuable company is they have this big database of all of our social interactions and our information, right? What if you didn't need that central third party to mediate our interactions, right? What if a sort of neutral blockchain handled that? Further, you could imagine that if you didn't like the development direction one Facebook was going on the blockchain, you could fork it, and we've seen a fork in Bitcoin recently, right? You could fork it to try many different ideas or directions. So as a result, you might imagine innovation could happen faster, potentially more freedom, certainly not some other party owning all my data.
Fred Ehrsam there, co-founder of Coinbase. Coming up, Apple has set the date to unveil the latest iPhone. With massive changes on the horizon for the device, we check out what it might mean for customers and the competition. Next, this is Bloomberg. Apple has told U.S. regulators it opposes charging higher fees for faster internet access, saying that paid fast lanes could replace today's content-neutral transmission of internet traffic. This comes just weeks after Apple pledged to spend $1 billion to make movies and TV shows to stream online. Now, a host of internet giants, from Amazon to Facebook, have also been sounding the alarm to protect the rollback of net neutrality rules. This is due to the FCC voting earlier this year to roll back Obama-era net neutrality rules, resulting in the lift of bans that block web traffic and building fast lanes that favor those willing to pay more for faster service. Well, speaking of Apple, as we told you earlier this hour, the company has officially set the date for its most significant new product announcement in years, September 12th. Back with us, my guest host, Elevation Partners co-founder, Roger McNamee. So how optimistic are you about a new iPhone at $1,000 price point?
So I think that's a big experiment, right? We're going to test price elasticity of demand in a big way. I believe the iPhone 8 is going to be a good product to test that thesis against, because when you look at the feature set, it does look compelling. But I do not think we should be sitting there assuming they're going to sell record volumes over the first few weeks. But I don't think that's what's important about this announcement.
What's important about this announcement?
What I think is that Apple has a whole lot of new product coming to market right now at a point in time when Wall Street had convinced itself the company wasn't capable of introducing new product that was any good. And I think the iPhone 8 is going to be a very good product. I think that the new Apple TV is going to be a really compelling product. On the watch, it's getting there, so we'll see. It doesn't matter so much. What I think really matters is that Apple has positioned itself on the consumer side of a really important battle. And the battle has, if you will, consumers on one side and Facebook, Google, and the other players in the attention economy on the other side. And Apple has very clearly decided it's going to take the consumer side, and thank goodness they're doing this, because at the moment our government is powerless. The European Union, which is trying like crazy to put some anti-monopoly protections in for consumers, has given it their best shot, and it just sort of bounced off the hull of Google and, you know, without any damage. And so I look at Apple right now as they're basically taking this thing that says, if you want to avoid having your brain hacked by Google and Facebook, if you want to avoid the addictive properties there, we're going to help you.
Let's talk about that. You wrote an op-ed in USA Today where you talked about how Facebook and Google are basically anti-consumer. You said, like gambling, nicotine, alcohol, or heroin, Facebook and Google, most importantly through the YouTube subsidiary, produce short-term happiness with serious negative consequences in the long term. Users fail to recognize the warning signs of addiction until it is too late. There are only 24 hours in a day, and tech companies are making a play for all of them. You think Apple is the only company that can change the tide?
I do, and I think the reason why Apple's uniquely positioned is that their business model is based on selling devices, not on occupying your attention. So the issue here is not that Facebook and Google are managed by bad people. They're not. They're managed by really good people. The issue is the business model. That essentially 10 years ago we lived in a world of information scarcity where being a network or being a movie studio or a record company, those were great businesses. When the iPhone came out, it slowly but then very authoritatively shifted us from information scarcity to attention scarcity, because suddenly people were on their phone from 5 minutes after they woke up until the moment they went to sleep. And there was so much more time available that the battle shifted from controlling the content to controlling attention. And Google and Facebook, because of their advertising models, used addiction as the way to do that.
So what do you think the moves that Tim Cook is making? He is making privacy an issue. He's also taking stronger moral stands, taking stronger political stands.
As an investor in Apple, I love Tim Cook as the CEO. And I love Tim Cook because I was a huge fan of Steve Jobs, but I don't know that Steve could have done as well in China as Tim Cook has done. And I don't know that Steve would have been as aggressively assertive. He may have, but Tim Cook has clearly been very assertive in terms of protecting the privacy of consumers. We've seen them voluntarily, they're going to make a change in the operating system to eliminate autoplay for videos, which is part of how the addiction process works. They've already put in all these authorized extensions to their browser that have ad blocking and tracking blockers. That's really, really important stuff, and every consumer should be putting that in place. Why? Because otherwise you're letting other people manipulate your thoughts. And you say to yourself, oh, Roger, that's too extreme. I'm going, my evidence is Brexit. My evidence is the election of Trump. There is, you know, you can't imagine those two outcomes in the absence of Facebook. And again, Facebook didn't do it. Facebook created a platform where third parties, malicious third parties, could go in, spend a little bit of ad money, create a lot of bots, and affect elections. And that, I mean...
Could blockchain, we only have 30 seconds, Roger, blockchain disrupt that?
I think it could, but keep in mind, as the previous guest, Mr. Ehrsam, just said, it's orders of magnitude of scale away from doing that, but someday I hope it does, because an unmediated social network would be a really, really fun thing.
All right, Roger McNamee bringing it right back to cryptocurrencies. Thank you, as always, for joining us on the show.
Emily,
always appreciate your direct and very intuitive insights. Roger McNamee of Elevation Partners. That does it for this edition of Bloomberg Technology. And a reminder, we are live streaming on Twitter. You can check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.